we actually raised the first venture capital fund to invest in agricultural biotechnology.
What do you believe then are key factors that make BioGreenTech startup successful?
That's a tough question. It takes about 15 plus years, 20 years to get it to the market. That's very patient money from the venture side. That's two venture funds that get you there. So one of the solutions is to try to figure out how to have those partnerships along the value chain established very early in the development of the company. One must be an AI. Well, making money in AI may be a challenge.
How can investors discern real innovation from actually marketing?
That's the whole challenge of venture investing.
Roger, first of all, welcome to Tomorrow's Bites. You're all the way from the US, and as you said, it is morning for you. I'm glad that you've been here because you built up a man's career. I mean, first in academia, did there valuable research, and now you also already years of experience as a capital investor and have your own capital fund in that sense, and even like you're running actually two funds in BioGreenTech. But I am wondering, how would you describe yourself? Because I can find it on LinkedIn and I see a beautiful description of your profile, but how would you describe yourself?
Well, I would say I'm a farm boy who grew up in Ohio, and throughout his career as a scientist and academic administrator and venture capitalist have been looking to bring innovation into agriculture to improve productivity, do it in a more sustainable way. And at the same time, which is my kind of most recent focus, is to make sure that farmers receive an equitable income from both the product they produce, but also the sustainability credits that they generate as they support the bio-based economy. So it's farm boy trying to give back and improve the economics of farming and the economics of rural communities.
Was that from the start, Roger? Was you were always had this feeling of giving back?
No, you develop that as you get older. so when you start off, you're really focused on building a career and doing good science and training your students, coming up with discoveries that have an impact in agriculture. As I get older, I think back and I look at the changes in the rural community where I grew up and the challenges farmers have to make a good income, and trying to revitalize these rural communities that guys like me left many years ago, right? And so many rural communities are struggling both economically and, you hear the headlines about drug issues and depression in rural communities, and just a lot of it has to do with there just aren't a lot of opportunities for young people, and so part of that plays back into farm economics, which drive the economics of those rural communities. And so I'm spending a fair amount of time now trying to think about how we can put together policies and incentives that address that issue.
Who would you say that were some early influences that sparked your interest in science and maybe later in venture capital?
I would say that most of it comes from growing up on a farm, right? and thinking about how you could improve agricultural productivity. And I guess some people have a lifelong plan. I didn't. I just kind of stumbled along and did well in science and thought about what's the next thing to do. And so rather than going out and getting a job out of undergraduate, went on to graduate school and from there, obviously, became a scientist. And so it was not any great epiphany. It was just a kind of a gradual evolution throughout my career.
I mean, there are not that much of venture capitalists with the background as you have, right?
Well, I think, the step into venture capital came it's kind of a natural evolution as well. I was an academic administrator and dean at 2 universities over a period of 12, 15 years. And so then it was, once you've done that for a while, you begin seeing the same problems kind of recycling. And so it was time to do something different. And then I was introduced to someone who thought I could be an interesting partner in a venture fund, and so made that logical transition into using a different strategy for investing in innovation. As a dean, you're investing in smart faculty who are the innovators, and here in venture capital, you're raising money and then investing in smart people when companies are developing innovation that can transform agriculture. So it's philosophically, it's very similar. In the latter, you just need to make a profit and get a return for your investors.
Yeah. I mean, when did you make that decision then to go fully into venture capital?
It was after I'd been dean at Wisconsin for about 6 years, and then the opportunity came up to leave academia and join a venture firm, and that's when I just made the decision to do that.
Yeah.
We actually, the reason, part of it is that this was back in like 2000, and there was clearly an opportunity. Venture capital was quite successful in the life sciences, but not in agriculture. And we actually raised the first venture capital fund to invest in agricultural biotechnology in 1998-2000. So I didn't leave academia until we actually had that fund pretty well raised, but it was the first one.
Why wasn't it? Yeah, why wasn't it earlier already? Like, why were you the first one? Why was nobody interested in actually going into Agri-Tech?
Well, keep in mind that venture capital didn't become popular until the late 80s, early 90s, and most of that had to do with IT, and the first real investment into biology-based companies was Genentech about that same time. And so it was quite clear that there were investable opportunities in healthcare, but agriculture was less so. And even in that first fund, you can have money, but you have to have companies to invest in. And we struggled in that first fund, even finding companies to invest in. So it was, we were very early in the cycle. But everyone thinks that if you have a lot of venture money, there's lots of opportunities. That's not necessarily true. The starting up new innovative companies was a new thing in the late 90s, early 2000s.
How did you find the experience to change from academia to venture capital? Like how were your first days as venture capital in that sense? Where did you think like you were managing more or less well, or there were so many things that you still had to learn in the journey?
Well, there was lots of things to learn, but keep in mind that a venture firm is not an individual, it's a team, right? So I had a partner who had a long career in investment banking. We hired people that had MBAs, and so they understood the business side. As a scientist, I understood the technology aspects and the market potential of products. So it's a team effort. When I read my first term sheet, it was like reading a foreign language. But I had people that could help me understand the documents and the various agreements that go into place in a venture investment. But it's a team effort.
And you said you were focused on the Agri-Tech, or in the agriculture, we could say. But as Shako pointed out before, like the venture capital, or at least the Sprouts venture capital, is in some way focused in the BioGreenTech. How would you define BioGreenTech?
Well, in my case, I've been trying to describe that and define that for a long, long time. But if you look, I said we raised the first Ag-Tech fund, but then what I developed within what was then Burl and Company was I built out the franchise in life sciences, but everything but healthcare. So think of it as biotechnology applied to agriculture, food, and industrial applications. So it's in life sciences, everything but healthcare.
And in this process, I was just wondering, we didn't talk about it. How was the journey of founding the Spruce Capital Partners?
Well, Spruce Capital didn't come on until 2013. So I was at Burl and Company, which was a venture capital merchant bank in the life sciences for 13 years about. And then some issues came up at Burl and it was disbanded, and we spun out all of the non-healthcare assets into Spruce Capital and then raised a new fund, which represents the portfolio that we have today. So Spruce was a spin out of Burl and Company.
Roger, and you have quite a various backgrounds, as you explained, from understanding the pain points from the agri, because you had your own background in that sense, going to the scientist part and then now the venture part. I wonder how, and now you're looking at BioGreenTech startups already for some years. What do you believe then are key factors that make BioGreenTech startups successful?
That's a tough question. The reason I say that is one of the concerns that I have today is that there haven't been a lot of great success stories in companies, startup companies in ag, and particularly in industrial biotech applications. But in any company, it obviously has to have a very solid technical and scientific platform. But I would say more importantly is the commercialization strategy. And products in this space have been challenging to commercialize at large scale. A lot of reasons, in the case of farmers, they're very conservative, so it takes time to get new innovations commercialized in agriculture. In the industrial biotech space, products at larger scale are commodity products, which means they're directly competing with fossil-derived products, and so it's an economic challenge to bring products into market, particularly if they compete with fossil-derived feedstocks, oil and gas. But in terms of successful companies, it's almost a cliche, right? It's great technology and really smart people as founders and managers, and then it's developing a good rapport and working relationship between the board and those founders, because every company goes through difficult times, and when you're going through a difficult time, the board and management have to work together in an efficient manner to address the challenge and move on, because small companies lack time and money. And so you have to solve these problems quickly.
What are then like the characteristics where you would look at towards the management board?
Well, the board in the U.S., and typically in a startup company, the board initially is made up of the investor pool. So as you syndicate an investment, all those investors will want to have a board position. And then later you bring in complementary expertise to help the company grow and develop. A good board is one that has representatives that can bring domain expertise, business savvy, market understanding to the decision making that boards have to make. And that's particularly important as companies go through difficult times. And then it's not just the expertise, but it's the working relationship. And so I chair an awful lot of the companies that I invest in. And as chairman, it's really my role to build a rapport within the board so that when difficult times come up, the board is prepared to work together to come up with solutions. So building that rapport within the board and with management is really important.
There is one thing you mentioned that I've heard it in other investors a lot of times, that is the part of the team. It's important to have a good team, and probably is really true. But from my point of view, sometimes I guess that can be a little bit subjective, right? Like you probably, how do you know that you have the best team? Probably you started this with your couple of persons, maybe you met in the university and you say, yeah, we're great. But how do you deliver that, or what do you need to deliver to the investor to convince it about it?
So keep in mind that a company, as it develops, goes through a number of stages. So I think your question is related to kind of investing in founders early on. Well, in that case, the company is really much, its primary risk is technology risk. So you're looking at, are these founders and the people they bring into their team capable of developing the technology from a science standpoint? But very soon, it transitions into being a business, and it's not just a science project. It's now has to become a business, and so you need a business strategy, which could be the business plan. It could be scaling up the technology to commercial, to understanding the market and how this product fits in, what's its competitive advantage in the marketplace. Many times founders can't make that transition. They're still science focused. And so one of the most important things that investors do is not just assembling the board that I described, but it's also recruiting in the right management team. So you may have to, and quite frequently, one has to bring in an outside CEO to run the company, and maybe eventually bring in a fairly almost all new management team, and the founders gradually have less and less of a role as it goes from being a science project to being a commercial operating company. And so it's quite, sometimes founders can make that transition, but usually that's not the case. And so you bring in people who have the market savvy, the business savvy to run the company.
To make things clear, to what series are you investing in?
In our case, we are early stage investors, so we're always in the series. We start Series A,
Series
B,
A.
so we're coming in
Okay.
early. So the transition I described is something that we as investors have to manage through frequently.
How can founders best align their vision with expectations of investors like you? Like, how can they do it in order to make sure that both of you are aligned into what you can get, or to what they can get?
Well, I think what founders need to do is try to pitch to investors that have domain expertise, that understand their product or their technology, and can bring both technical understanding but also market understanding. So they're now a team trying to build a successful company. That's probably the most important thing you need to have. And then the other thing is that founders need to have the ability to listen, because it's quite frequent that, particularly early on, founders are enamored with the science and think it's going to solve the world. But in fact, it's 10, 15 years and a few $100 million to de-risk it before it gets there. And so there needs to be mutual respect and the ability to listen to new ideas and new approaches, because your incentives are aligned, right? Investors want to make money, and founders want to be economically successful and bring important products to market. No one has all the information to do that, so you have to be able to listen and build a common understanding of that vision going forward. Sometimes it fails, and so there has to be either a change in management, or you have to bring in different investors, and the company will go through a difficult transition period to do that. But my most important thing when I are talking to founders is, do I sense that they have the ability to listen to different ideas about how to make the company successful?
That is a very smart advice. I think what I also see, and where you pinpoint on, is like you said, for instance, that of course a good product, a good technology is setting you aside, but towards a successful startup, and then also the team assembled, like what do you have in your management board, can it withstand the down parts as well? And I'm wondering, like, what are other key milestones or factors that you take into account before like deciding to actually invest in a startup? Because what I also know is that, and I have seen research in looking at, okay, what is the difference between successful innovations and non-successful innovations? And it doesn't always rely solely on the product, but the bigger part is actually the social innovation part, which is actually the ecosystem that you can enter and that you can accelerate it. So
that's a really, really important point. And that's I mentioned to you, and I'll use industrial biotech as the example. If I've invested in probably 30 companies in that space, and none of them failed because of the technology or the product. In other words, they could make the product, they could make it at scale, and and it performed as designed. And so the question was, why did they fail? It had more to do with the ecosystem in which they're operating. For example, it currently takes about 20 plus years to bring a product to market in the industrial space. And it's true in most space. It's true in agriculture as well. It takes about 15 plus years, 20 years to get it to the market. That's very patient money from the venture side. That's two venture funds to get you there, because a venture fund is 10 years. And then the second is that so one is the timeline. Then the other is the ability to capture value. You probably heard the adage, there's no green premium. So it doesn't matter if you're producing a molecule using biotechnology and therefore it has less environmental impact. It still has to perform in the marketplace equal to a fossil fuel derived product. And now it comes down to price point. And the fossil derived products they're using infrastructure, refineries, et cetera, that have been double depreciated. And you're now a new biotech company scaling up, building fermenters with brand new investment in capital. And so it's almost impossible to compete on price and performance. And so I define that more as the ecosystem issue that we really struggle with particularly in industrial biotech today. And so one of the things that I'm working on is, how do you address that? And part of it can be beginning to look at pricing ecosystem credits. You hear a lot about carbon credits. And so for example, if we can produce sustainable aviation fuel using products derived from agriculture, and if we can capture some of the incentives that the US government is putting in place, or in Europe, they have a carbon tax on aviation fuel, if that can be used to supplement the cost difference and to help pay farmers for producing feedstocks with low carbon intensity, then the system begins to make sense. And that's kind of addressing the ecosystem challenge that I talk about. We just need to be creative about how we create and capture value and how we reduce time to market.
You mentioned quite some interesting things there, and I wanted to go like just to back to some of them. And you said this thing like it takes to 15 to 20 years to get industrial tech no, in the market. And also maybe this is a really common affirmation to do. I think it's just really important to ask why.
Well, there's a number of reasons, but one of them is that the whole value chain operates in a linear fashion. So if I'm a startup company, I develop a technology and then I go try to find a partner to be an offtake. And then I need to scale. And the next step then is the company plus the offtake partner tries to raise capital needed to scale. And so they need to find a financial institution to finance that. Once they're able to scale, then it goes into testing. And so the offtake partner will test the quality of the product and how it performs. Once he's finished, then let's assume it's going to a consumer-facing company, a brand company. They then test how it fits into their brand and how it performs in their product. And then it goes into market testing, and all of that long period of time takes this 20 plus years. So one of the solutions is to try to figure out how to have those partnerships along the value chain established very early in the development of the company. And one of the things we're working on is trying to take the friction out of those relationships. So when a company develops a new product, they actually have relationships all along the value chain with even the consumer-facing companies very early on, saying, here's how it fits, here's the tests that need to be done. It fits in, and they become advisory to the intermediates so that the process can operate in a parallel fashion as opposed to linear. And I think there's a number of companies that are thinking about how to do that. It's difficult, it's challenging, it's a new way of working, but we have to reduce that timeline for not just financial reasons, but if you just think about all the incentives we have in the US or in Europe today for moving to a bio-based economy, a lot of political support. Well, if it takes 20 plus years to get to market, that means a congressman had to get reelected 10 times to see something he supported early on actually have commercial impact. So it's just a non-starter from both political and financial backing.
Also, another concern is not that the VC model, which is used also widely for the tech and it's relevant, is not that relevant for the agri side, right? I mean, if you talk about 15, 20 plus years, you can also question of like, is then the actual model that VCs use the ones that we should use for the future?
That's a very good point. And it comes up many, many times. And when I have companies come in and pitch, I will sometimes tell them that, you have a great company, you have a great technology, but it doesn't fit the venture capital factors for success. We have venture capital is a 10-year fund, so we have to deploy the capital into a portfolio early in those 10 years, build value, and then exit within 10 years. So that means the companies have to scale fast and create value quickly. That may not be consistent with deploying products into agriculture, for example. It's very important to align the capital formation strategy with the product you've got to make sure that it fits. Because if you take money from venture capital, we're going to be pushing really hard for building value and exiting, and that may not be consistent with the market you're in, the product you're in. So you need to make sure you select your investors very carefully and make sure it's aligned with the market that you're penetrating.
Roger, don't you think like you established the first agri fund in America? Can you not make it happen? The first actual fund that thinks about sustainability long-term goals for 20 years.
Yeah. I think that then, just to use the sustainability things, for example, you hear a lot about cover crops in agriculture. That's been around a long time. There's been companies, Covercress was formed around developing pennycress as a cover crop. You can use the seed for oil. There were hundreds of millions of dollars invested into that company. It was bought by Bunge and Bayer, and they're still struggling, even they're struggling to bring those products into agriculture practice. And part of that has to do with the risk of the transition. Farmers have to change their farming practices. That just takes a long time. And so hopefully now venture what came into that company to build the capability, but now it's going to be up to the big guys, the Bayers and Bunge's that have the larger balance sheets that can have the patience to bring those kind of products to market. But it takes a long time.
Yeah, so eventually also the use of the ecosystem in that sense. We actually never talked about one thing, and I would actually want to know it, like your first major investment decision. How did that happen? What were the lessons that you learned from that experience?
I don't, so no, there's no kind of seminal moment, right? Investments in venture are around building a portfolio. So no
Yes.
one investment is kind of a highlight, because at the time you're doing it, you're looking at, and we're early stage investors, so we're looking at the technology from a science standpoint. Do we understand the risk? And then as it evolves, it gradually evolves into the business strategy and the market potential. Early on we would say if it's successful, there's a big return because it's a big market, but there's a lot of gaps to get there. So I would say that it was not the first investment. It was more the portfolio construction that was important. And there, things move so quickly, but that first fund was investing in some of the early genomics tools. I don't know if you remember single nucleotide polymorphism mapping, and using that to map the genome and then identifying genes that were important, and then looking at the phenotype of those actually being tested. So we were investing from kind of mapping to gene discovery to phenotyping of important traits that we thought would transform crops. So it was, the more interesting part was constructing that portfolio strategy.
So any lessons that you got from the experience of building the portfolio?
It's not about the science, it's about the commercial strategy. I mean, and I'll tell you reason I say that. So even though we were successful in that strategy, it made a lot of sense based on science. But if you think about the products coming out of that, we identified genes that were important. They were validated in automated greenhouse evaluations. Crop Design was one of those companies in Europe that got bought by BASF. So we could identify the genes, we could prove the genes were important in new agronomic traits. But then think about the time it takes to go from that gene being identified to take it through all the regulatory approval that you need. This is the GMO, right? And so it costs probably $100 million just to take it through regulatory approval. And then you have to go through all the field testing, and then you think about market acceptance of GMO products. So we did a great job on the science of identifying the gene, and then, but no one was buying those traits just because of the cost of taking those traits to market commercially. And that's why, there's almost no companies that developed any traits for crops. You're getting some of it today using gene editing, but the regulatory complexity was so stifling that none of those traits that were developed by those early stage companies ever came to market. So we didn't appreciate, even though we knew it, we didn't appreciate the challenge of regulatory approval and time to market.
Is it then? Yeah, well, I mean, that then always comes back, right? I mean, you will always face these regulatory hurdles within the ag space.
Yeah,
If would say similar.
you do, but currently, I think we're moving. You always have to go through regulatory approval. You're absolutely right. But in the case of genomic derived traits, in the past, those had to go through kind of the GMO gauntlet of approval and then had the issues of public acceptance. Currently, we're using gene editing to do much of those same things. That technology seems not to have the resistance that GMOs did. And so you're going to see a lot of products coming out that are using gene editing, which has been described as simply accelerated plant breeding. Not exactly true, but that's how it's being perceived. And so, therefore, the time to develop those products does not have that long, risky regulatory approval process.
When you build a portfolio, do you consider the complementary parts of the different companies that you put into your portfolio? So you observe, okay, this one is solving something that this other company in my portfolio can help to accelerate it a couple of years, for example, the advance. Is something that goes through your mind?
No, no, I've never used that as one of the criteria for developing a portfolio. What you try to do is make sure all the companies aren't addressing the same market, because markets go through cycles, right? So you don't want, and these companies you invest in aren't going to be in the market for 5-6 years, and so predicting ahead is difficult. So, and I'll give you an example of what I mean there. You remember when biofuels was really hot, and you could, there were a whole bunch of companies that we invested in that were dependent on the biofuels market, whether it was developing new strains of microbes or ways of converting biomass into cellulosic ethanol. But then the biofuels market declined. And so all those companies failed because the market changed. And so when you construct a portfolio, you usually try to have a mix of some really early companies and then some that are a little bit later stage. You look for companies that are addressing quite different markets, so that if a market changes, you still have other companies in different markets that maybe the timing is right. So it's think of it as diversifying the risk, just like you would in a stock portfolio. You try to diversify your risk based on market, stage of development, type of technologies.
Yeah, so this is how you balance the risk eventually in your portfolio. Wow. Because indeed what you said also, the outcomes can be highly unpredictable in these fields of agriculture and biotech.
And you also, you all know or familiar with things go through cycles. So there's a hype, AI is hot right now, right? Everyone wants to be an AI. Well, making money in AI may be a challenge, right? Because it's such an early, you're adding value early in a value chain. And so you need to be careful, because every technology goes through a hype cycle. And synthetic biology went through a hype cycle, and now you're finding out it's just a long time to bring those products to market. So a lot of companies fail because it was an overinvestment in a space. So you have to be very careful.
Going on to this, like this is hype, right? Like as you say, like AI is a hype. With the growing of hype also around regenerative ag and sustainable technologies, do you think that some startups might be engaging in greenwashing to attract investments? Because that's also like, the internet dot is also an example of that. I'm wondering how can then, like how can investors discern real innovation from actually marketing?
That's the whole challenge of venture investing. you and that's why it's really important. Both sides of that question, right? From a venture investor, you need to stay in your lane and understand, make sure that you invest in areas that you really understand, because always, every investor is going to spin what they sell you, right? They're all going to try to paint a very positive picture. And so the venture investor needs to be able to really understand that. And the flip side is, founders and early stage companies need to make sure that they're recruiting investors that understand the space. And it's not just greenwashing, it's in lots of categories of going to market. But yeah, greenwashing is one. But in the case of an early stage company, it's all potential, right? It's all potential emissions reduction, right? It doesn't matter unless it's scaled. If you can do it on 100 acres, that really doesn't matter. It's got to be done on 1,000,000 acres, right? So a lot of it has to do with, particularly early stage, their technology has the potential, but the challenge is making sure it's scaled and on enough, the application is broad enough to really have impact.
How does BioGreenTech interact with the actual trend of regenerative agriculture and coming back to the roots? Because I believe that sometimes there can be some sort of friction between the idea of using every time more technologies or techniques like genetic modification against the fact that we are trying to go for polycultivation. Everything shall be more natural. How do you see that friction in these two trends?
Well, I can give you a perfect example. One of my companies today, Pivot Bio. So we want to go back to reducing the environmental impact of crop production. So Pivot Bio has used gene editing to modify microbes that have the innate ability to fix nitrogen. Ability has been lost because of the use of nitrogen fertilizers. So there's feedback inhibition within the microbe. So they've used the latest tools in genomics to relieve that feedback inhibition. And as a result, they have microbes now that they're deploying in the cornfield. Those microbes colonize the corn plant and replace about 50 pounds of nitrogen. So their next set of microbes will increase that even further. So that's reducing, and in the case of nitrogen fertilizer applied to corn, almost half of it is lost due to leaching or runoff. And so if a farmer's putting on 200 pounds of nitrogen per acre, he's losing maybe 75 pounds of that before the plant ever sees it. So here's a microbe that colonizes the root, and all the nitrogen it fixes is taken up by the plant. So there's no leaching, there's no noxious N2O emissions polluting the environment. So that's an example of using cutting-edge genomics technology, being very consistent with sustainable agriculture, reducing the use of synthetic fertilizer.
There is one thing about GMOs that I guess because maybe in Europe we have a really strict rule against them, and of course in the US it's more open, but don't you have like the feeling that there's so much still that there could be a potential threat in the abuse of GMOs?
So this is a topic I've been debating since the 80s when it first started. And I think the the argument against GMOs has no scientific basis whatsoever. We've been using GMOs in corn and soy, major crops, corn and soybeans, for 30 years. And from a safety standpoint, environmental standpoint, there's been absolutely no adverse events. And now you could argue that it perpetuates monoculture, which has an impact, but it certainly has reduced pesticide use. It's improved productivity without any demonstrable health effects or environmental effects. So I think from a science standpoint, the results are quite clear. There's still a lot of public perception out there and misinformation about it, and you could argue that it did perpetuate monocultures, which everyone would agree is probably not. You need more diversification. But I would argue that probably the biggest factor on monocultures is many government policies that perpetuate it, right, based on whether it's crop insurance or other incentives on farm policy that probably do more to perpetuate monocultures than certainly the technology of GMO.
Another argument could thus also be that there is just more agribusiness dominance by larger companies, right? Like large corporations.
That's absolutely true. It goes back to what we talked about a few minutes ago, which had to do with no small companies have been able to bring any products to market, no new traits to market because of the regulatory burden. That plays directly on the GMO issue. Now, you can argue that because of the public pushback, GMO regulations became overly burdensome, and therefore people like to bring products to market with big companies. So it's hard to tell which was the cause and which was the effect. Certainly, technology and germplasm is controlled by a few very large companies. So it's an issue of concern. Certainly, say it is, but changing that would be equally difficult.
So it has to, keep in stand. I also know that I like this topic as well because I saw lately also a documentary on like how it goes in South America. And what you say is one of the reasons that, it's definitely want to address is that the keeping actually monoculture in stand.
I'll give you this is an anecdote that happened this week. I was on a call, Pivot Bio board call, and when I came on the call, some of the board members have farms. And right now we're in the middle of corn harvest in Iowa and Midwest here. And this one person said, was all ecstatic that his farm had a record yield this year of 280 bushels to the acre. Well, when I was growing up in Ohio, we had a corn yield contest. And I took the record in the county with the first 100 bushel per acre yield. So since I was in, say in 1960, late 60s, early 60s, when I was just coming out of high school, I got the record yield of 100 bushels the acre. Today, that's almost 300 bushels the acre. So now, you could argue that there's been a lot of environmental side effects of that, but on the other side, that's 300% increase in yield is pretty amazing. And so technology has brought us a long ways. Now we need to understand how to mitigate some of the negative effects of that, but we can't afford to reduce that kind of productivity because we have a growing population, global population to feed. And now as we transition to a bio-based economy, agriculture has to supply those feedstocks, right? That's where they come from. And so their real urgency is not to is to continue that yield curve, but also to reduce the environmental impact of producing at that level. And I gave you an example of Pivot Bio being one way to do that.
For what I understand, you have also covered a role of international advisory panel in the international advisory panel for biotechnology that actually has led you to have direct conversations with some world leaders, as it could be probably the president of the United States. What are key policies you advocate for to support to support innovation in BioGreenTech?
Well, I think most of the government incentives need to be around the general principle of providing a level playing field. A few years ago, it's declined dramatically, but a few years ago, there was like $30 billion of venture capital in ag and food innovation. That is, the USDA's budget is $150 billion. And so that was almost a third of the USDA budget, of which half of the USDA budget is in nutrition programs, right? So that amount of private money coming in just in venture capital, not in what big companies are investing, but just venture capital, dwarfed the research funding that USDA puts out. So what was missing? What was missing is this acceleration to commercialization. And so in the case of ag, it's what can government do to provide a level playing field to de-risk early adoption of innovation. So when a product comes into market, what could government do to accelerate its testing and adoption? In the case of industrial biotech, it goes back to this issue of bio-based products being able to compete against fossil-based products. And so the level playing field relates to the U.S. government still subsidizes oil and gas. And so if they're subsidizing oil and gas and you want to convert to a bio-based economy, then they better subsidize bio-based economy to get there. Yeah. And I don't just mean it from a subsidy, but there has to be many different aspects to a level playing field so that these new bio-based products can compete in the marketplace. And so the most important thing to developing a new industry is long-term support of policymakers to build a new industry, and what are all the elements of access to capital, conducive regulatory environment, incentives, etc., that you would give to any new industry, like we did for electric vehicles or like we did for other areas, that it needs that same kind of attention from government.
Do you believe that in the US, because this is where you're more familiar, there is an active lobbying against innovation in the BioGreenTech that influences government policies in that sense?
There's always diversity of opinion. And so I don't know, I wouldn't say so much active opposition, but I would say this passive dismissal, right? For example, some of the reasons to go for a bio-based economy is mitigating climate effects, right? Well, there's people that are actively, supporting that, and then there's some folks that don't even believe climate change is real. So they're obviously not going to support, not that they kind of negatively oppose it, but they certainly wouldn't support it. And we even have to, as we think about new policies supporting a bio-based economy, you have to be careful of what words you use, right, to make sure you don't generate any negativity. For example, it's almost, if you go to Washington, you don't mention climate change as one of the reasons for a bio-based economy, right? You talk about jobs in rural America. And so I think, sure, there's always a diversity of opinion about these, and this one is no different.
Yeah. Indeed, you change your strategy style, the communication style, and I can fully understand that.
And that's
Roger,
true no matter what, right? I mean, it's
exactly.
in any areas, you have to just be careful about the words you use because words are interpreted differently by different folks and based on their perspectives and experiences.
Exactly. That's actually also, I think, you know that I wanted to ask you the question, what is the advice you would give to, like, let's say, entrepreneurs seeking for investments to end it, like, to go to an ending of this conversation? But I think this is one of the things that you could also give as advice to these founders is like speaking the language of the investor whenever you sit around the table, right? Change your communication strategy.
Yeah, I think that's an important point. It goes way beyond investing. Whenever you're communicating, you need to understand where that other person is coming from and what their perspectives are, and then use words that are consistent with conveying your message and not having it misinterpreted because of some legacy understanding of an issue that you're with the people you're talking to. So same thing with when you're trying to commercialize your product, right? You have to have the right language is how you frame it. And it's no different when you talk to an investor. I'll just, relative to what we said, if you said, I'm producing I'm producing ethanol. If you went to an investor and said it could be used in biofuels, you'll probably not get funded. But if you said that it could be used to say converted, that ethanol could be converted into fabrics for renewable fabrics, it'd probably get funded. So molecule you're producing, it's just how you talk about it.
And I have an interesting question for you. It's like, how would you communicate in your success, Roger? What is for you success? Is it coming in the investment part, or is it in the sustainability part, or is it even combined?
Well, for me personally, it's a combination of all those, right? You have to be financially successful, right? That's my retirement. and so you have to be financially successful. And financial success is kind of a way to keep score. But if you're investing in sustainable things and you're making a financial return, that means that the technologies or products you were developing for sustainability were successful, right? So it's a bit of a way to keep score. But I have a number of companies I'm particularly proud of. Pivot is one. Another one in the industrial space is Lonza-Tech, which has its fundamental technology is gaseous fermentation. So they can take carbon monoxide off of steel mills and convert it into ethanol, and now it's into broad range of products. They can take CO2 off of a corn ethanol plant and convert it into chemicals. That improves the CI score of the corn as a feedstock going into sustainable aviation fuel. And they're recycling carbon into a broad range of products. And most recently, they just did a deal where they can convert municipal solid waste into a gas for fermentation, and now it can be used for all the products you could think about coming out of chemicals in fermentation. So those are some examples of companies having real impact. Another one is Provivi, which has producing insect pheromones, so it replaces insecticides, not just in horticultural crops, but in broad acreage crops. So they're really disrupting the fertilizer business to the insecticide business. So those are companies that are having a real impact. Yet to show financial returns, but certainly addressing major issues in large markets.
Well, Roger, we are about to close the conversation, but there is always two questions that we do to all the guests at the end. The first one is, well, we made you a lot of questions, so it is only fair. It's only fair if you make us a question back that we shall answer.
I guess you're asking what is my question back to you all?
Yeah.
Well, I guess I think what you guys are doing are important, right? You're doing podcasts that relate to conveying the opportunities and challenges in innovation. Yeah, I guess the question would be, how do you see the opportunity to broaden your impact, right? What's your strategy to increase the impact of your podcast, and how do you measure that?
I can start, but maybe I break in the middle, so we will see. So I think that one thing that we need to focus is we have built some sort of proto community, I would say, around the podcast. People that come to us and say they like the podcast, they like the conversations. So I would say that part of a way of broadening our impact is precisely to start creating this community, like starting from this proto community to start a bigger community in order to be able to share these interactions that actually our community is full of people that is really interested in the impact in food in order to start accelerating the change. In the end, we believe that it's this kind of interactions that what can help to solve the problems that maybe somebody else has already solved. Connect with the person that you need in order to overcome the challenge that you're facing. So I think that was one way, or the way forward for us in order to have more impact, focus more into this identification of who our community is and how can we put them to work together.
But what you described was organic growth. How can you accelerate that? I mean, how could you partner with, say, some kind of advocacy groups that could use your podcast as a resource, and how can you get to policymakers and influencers that could use your podcast as a resource? So what you described was organic growth, and I'm going to give you kind of the investor feedback. It would be, how can you accelerate that and leverage that so you get the impact on the influencers that are important for the industry?
Is that a question back to how can we get that?
Yeah, because it would just seem that if you could think about where can you find synergistic relationships with advocacy groups that could use you as a resource, and then they would use the information they get, and they're talking directly to policymakers, et cetera. So that would give you broader influence into what's actually the ecosystem.
That is lovely advice, Roger. Thanks a lot. Maybe it's something we should really have a think about. I don't know if Shako would like to add something to what I answered.
No, no. You did a good job in that sense. And indeed, Roger, this is what we were talking about: is organic growth, right? In the end, what Anders stressed. So what you give forward, yeah, that is something. I mean, we came to the point now, the last weeks, where we actively discussed with each other about what is the actual additional value that we can give to all the audience and the community that we built so far. Because we are quite unique in that sense. What I would say is that we don't take any, like, I told today also a person about this, that we always think about, and as you say, you can create products, and the innovation is like 20% addressing the success of it, but actually that 80% is what the ecosystem builds, and that's with food and agri. This is the case, which means that you cannot just solely only listen to one perspective. And a lot of podcasts or a lot of communities are just solely one perspective, and it's like quite a messed up, like spread away community.
It's working in silos. It's just like in companies. You work in silos.
Exactly, and we need a space that is bridging those things and understanding the perspectives, and actually then think about, okay, how can we then address these big problems that we are facing within the food and agri?
Yeah.
Because we are not moving forward a lot,
Yeah.
and it needs to go faster.
What I would suggest is you're having podcasts about all the complexity in this big issue, that confronts us, and then how can you leverage that into being used by various groups? So you're essentially bringing them diverse viewpoints that they can then integrate. It'd be worthwhile thinking about how you get to those advocacy groups and influencers to use your podcast as database.
Actually, I don't know. I think Shako was present when that happened, but one of our guests was the chairman from the FAO, so from the United Nations Division of Agriculture and Food. And one of the things he was more impressed when he visited the Netherlands and he visited the university that Shako is a place for work, was that he had the feeling that many leaders do not know like the amazing stories and amazing ideas that are happening and conversations that are going on in the food industry. So that shows you already that there is these policymakers that require to have like more exposition to this in order to know like what's going on.
Well, and part of that is what policymakers get are, they get inundated with people who have an agenda. And so what you could come across as a sort of an unbiased source of information, right? So they could, you guys don't have an axe to grind. You're just interested in the broad development of the food and ag industry, right? And so you could in fact be an unbiased source because everybody who walks into a policymaker's office has an agenda, right? and they have
So
to
you should.
figure
I
out.
think we should tomorrow walk into the policy offices here in the Netherlands. Say like, we don't have an agenda with us, but we would like to talk.
That's good. That's good. Well, there is the second question before this part of the conversation has been lovely. But the second question we do to all the guests, and I think it's a really difficult one. Sorry, Roger. We always keep it in the end. What is your favorite food or dish?
Goodbye, steak.
So,
you're from the area.
Well, you're based in Texas, no? So you're like really.
Yes.
Oh, good. I was there in Texas this summer, and for the first time I could try the steak from there. So I can tell it's good. It's no joke.
Did you have Texas barbecue?
And we went to we were in the Route 66 and we stopped somewhere in Amarillo. It was not a whole barbecue. It was just like in a steakhouse, so in a Texas steakhouse. Yeah.
Roger, I want to say I think we come to an ending of this podcast, and I thank you a lot for this conversation. Very insightful. To be honest, we dived in different questions that I sent you before, but that is how it always goes within our conversations. I liked it a lot. We can go even deeper into the investor perspective in the future if you would like. If we get like tangible questions from all the audience, this is also an outreach to all the audience. You can come up with it. I would say thank you a lot, Roger. You did wonderful work already with the career from research part. I actually didn't ask you about you even got awarded on your research as a youth high youth researcher. But yeah, I mean we have now so spoken about a lot of things. And thanks a lot.
Pleasure.
Thanks.